What is up, YouTube? I'm Adam Odell, Chief Investment Strategist at moneyandmarkets.com, and I'm joined this week once again by my research analyst, Matt Clark. And we're here for another episode of Ask Adam Anything. This is the first week of May. Stocks are certainly a little bit wonky right now. The Fed just came out with an interest rate decision, and so we're seeing some really choppy back and forth whipsaw moves. So we'll get into today's question with you, Matt, but I know that basically everyone's wondering, what should we do with our stocks at this point?
Yeah, that's got to be the big thing right now, especially Wednesday after the FOMC meeting. The Fed chair comes out and says interest rates are going to raise another 50 basis points, which is one of the largest jumps we've seen in recent memory. And initially, the stock market seemed to respond favorably to that and push itself higher. But towards the end of the week, it was just an absolute bloodbath. I mean, just stocks across the board were just getting hammered. Tech stocks down, consumer discretionary stocks down. Just every sector of the market seemed to be just taking a massive hit. And when you see those large declines like we saw, 3-4% in the for the broader indices, I think that brings about a lot of market panic with retail and institutional investors alike in terms of what to do. I mean, we're seeing this massive downtrend in the broader market, and everything across the board just getting slaughtered. And I think a lot of people are thinking to themselves, maybe it's time for me just to sell and have cash, and that's it. And I think that presents an opportunity for you to, kind of give your insight on best practices and how to handle these types of situations, because we can't always say that the market is rosy. I mean, we can't deny the fact that the market is in a turbulent time right now. It'd be foolish of us for us to deny that. So I think the best idea here is let's talk about what investors, retail, institutional, otherwise, what should they be doing right now when we see this drastic market downturn?
Yeah, no, Matt, I think it's important that you pointed out, you said it very well, that we're not really perma bulls. We're not perma bears. We're basically cautiously optimistic investors who know that over the long run, stocks have always gone higher. Now, that doesn't mean that that run higher has been punctuated by pullbacks or corrections or bear markets or panics or crashes. Of course they have. And so really, my advice to a wider audience is it's difficult to give because the advice is a little bit different whether you're a shorter term or medium term swing trader versus a very long-term investor. But really, I mean, the panic is never the right thing to do. So if you haven't had a plan in place before this point, now you wake up and you read that the NASDAQ 100 and several other indices are in bear market territory. It's really a little bit late to formulate a plan, but the first thing you want to do is not panic and think back to what your goal was with your investments or your trades. And if the goal is still attainable and if you're still following your process, you really can't let the market moves shake you out of that. So it is difficult because this is a time of year, usually from November to the beginning of May, that's the best time of the year for stocks based on seasonality. So it's kind of odd that stocks peaked so early in January and have fallen for the past 4 months or so. And really, that downtrend, that pullback, that rotation was already in process before last week's Fed hike of 0.5%. So it was certainly odd to see the reaction. I think a lot of the rally on Wednesday afternoon was programmatic algorithmic trading, seeing a little bit of price action momentum on the upside and kind of piling into that. But it really was telling that on Thursday, stocks were down hard and reversed all of those gains. But I have one indicator that basically shows indiscriminate selling. And it basically looks at a ratio across all stocks that are traded on the New York Stock Exchange, and it counts the number of stocks that are down relative to the number of stocks that are up on a given day. And on Thursday, the day after the Fed announcement, 8 stocks traded down for every 1 stock that traded up. We haven't seen that bearish of a day since the summer of 2020. So it's been quite a while, but it's actually a counterintuitive indicator because typically stock prices rise and they rally after such a pessimistic down day. It's kind of like the signal that everybody is kind of like all at once given up on the market and given up on all of the market. They've sold not just the bad stocks in their portfolio, but they've sold all the stocks. I mean, again, 8 were down for every one that was up. And typically that signal is a kind of a sign of exhaustion selling. And typically around that time and around that price level is when bargain hunting, so to speak, bullish investors step in and start to buy stocks that they've been eyeing for a while, but that were waiting for some type of PDE ratio compression. So ultimately, you know that we're being cautious. We form a portfolio of diversified, well-rated stocks. We have stop losses that we follow on the ones that are not performing well, but ultimately we're still buying. I mean, we believe in buying consistently through every part of the market cycle. And the key is to buy stocks that, no matter what system you follow, are well-rounded on a lot of the factors that are known to drive market-beating returns. Talking about value, momentum, growth, quality, size, volatility, things like that.
And that dovetails nicely. First off, I just want to say that there's still money to be made in a bearish market. It's not all just because the market is bearish doesn't mean there are no opportunities out there to find profit in your portfolio. But what you said kind of brings up an interesting point I want to touch on a little bit. You talk about those metrics, and that's something that we look at very hard with our stock power rating system at moneymarkets.com. This is a system that you devised. It's proprietary. It's not complex by any stretch. What it does is basically it breaks down a stock into 6 metrics, 3 technical and 3 fundamental. And I want to talk about that and talk about that as a tool here that even in a bearish market or a correction market, that someone could go and use and find solid investment opportunities even when the market's down.
Yeah, no, a lot of people think about diversification and they think that they need to buy, 30 or more stocks. But if you actually did a scan of those stocks and figured out what factors they were loading on, you might find out that your whole portfolio is a growth portfolio, and you have no value stocks in there. You have no high quality stocks in there. You have no momentum stocks in there. Certainly in this environment where growth doesn't have positive momentum. So really the portfolio that we build at Green Zone Fortunes, which is kind of our flagship newsletter, is looking to be very well diversified across those 6 factors and really not have it lopsided in one realm or the other. I mean, if you look at ARK-K, Kathy Wood's innovation and growth, I mean, we're certainly here at Money Markets are all about innovation and growth, but we know that there are parts of the market cycle where growth gets hammered. And that's really kind of what we're going through right now. So the good news is if you're looking to add high innovation, high growth companies to your portfolio, now is a better time than it was 3, 4, 5 months ago. The bad part is if you held a portfolio that was only high growth, high innovation type of companies, you're not down 20 to 25% right now. You're down 50 to 75% right now. So really our portfolio adds a number of value stocks. Look, back in 2020 and early 2021, we were adding industrial type stocks, steel stocks, construction stocks, and a number of stocks that were not as glitzy as what you're reading about in the high innovation, high growth space. But those are the stocks that are performing right now. Even old energy, even dirty oil and gas companies. Everybody's looking to EVs and renewable energy, and we're huge fans of that as well. And we know that that's the mega trend of the future. But price dislocations in 2020 and 2021 made it kind of a no-brainer for us, at least, to buy some oil and gas companies. And again, those are the stocks that are doing really well in our portfolio right now. We found those through our stock power rating system, and their value ratings were just too good to pass up. So that's really, you want to look at a well-rounded approach. And right now, we're making this tool available to everyone on our website for free. If you go to moneyandmarkets.com, go to the top right-hand corner, there's a search box there. You can type in the ticker symbol of any company you're interested in looking at, and you will find the 6 factors as well as the overall rating on that stock. And we basically, try to focus on stocks that are rated 70 or 80 or above. Matt, I'll plug you. You do a great job every single day. You are emailing our subscribers with a stock that rates very highly on a number of those factors. So I really think that, now is not the time to freeze up or panic. Now's the time to make a short list of companies that you want to buy, high quality companies that are well rated across the board. And then you don't have to buy right now. You don't have to buy falling prices. That's one way to do it. But there is, the idea of catching a falling knife. Sometimes we talked about Coinbase last week, or maybe a week before last. And we were talking about how its valuations are so much better. Its PDE ratio is so much more attractive than it was 18 months or whatever ago when it IPO'd. But that doesn't mean you have to buy Coinbase today. You can wait for some type of an uptrend to develop, whether that's a 1 month uptrend or a 2 month uptrend, or just something to show that prices started to turn back around. You're not going to necessarily buy the very bottom price, but you're going to buy at a point where hopefully things have turned around and it's up from there. So that's just some general advice. And of course, for more specific advice, we hope that people would join us at Green Zone Fortunes, or I have a number of trading programs, Home Run Profits, where we trade options. That's also a bullish type of program, but we were able to buy put options on the small cap Russell 2000 index, several weeks ago, and we're up, more than doubling our money on that type of a hedge. So if you're interested in some more shorter term or options trading ideas, we have services for that as well.
So the key thing here is the market is down. Not really sure, what the future has in store. Nobody knows that. Nobody has a crystal ball. Anyone who says they can predict the future of the market is lying to you, because it's just not. It's not feasible. I mean, realistically, heading into January, the thought, conventional wisdom would be that we're going to continue a bull market run, but that's just not the case. And that's not happening. So, the key here is don't panic. Don't trade on headlines. If you have a system, work the system. Remember why you're doing it in the first place. And if you're looking for that extra help to guide you through, Adam, Charles, and myself, we've got your back. We're there with you. We're going to walk you through it. You can use our stock power rating system at moneymarkets.com. That will certainly help you out. Also, Green Zone Fortunes. We'll put a link up top here so you can find out more information about getting into Green Zone Fortunes. This is where we give you our best stock each and every month, in addition to tons of analysis, in-depth discussion on the market and on various stocks. And it's a portfolio that is doing very well even today when the markets are down. So definitely encourage you to be a part of that. We'd love for you to join our Green Zone Fortunes family and be a part of that growing community as well. Adam, any parting shots here on the market as we head into a new week of who knows what?
I won't step on your toes. That was a great summary. And, each week is a new week in the market. So we'll come back on Monday with fresh eyes and see what the trends develop from there. It looks like stocks are trying to find a bottom here. We're recording this on Friday, 2 days after the Fed meeting, and it certainly seems like buyers are stepping in a bit. So we'll see if that holds next week. Nobody really wants to go into the weekend with a whole bunch of new positions, but it's encouraging to see some bit of bullish action here, and we'll see if it holds.
He's Adam O'Dell. He is a chief investment strategist for Money and Markets, and he is also the guru for Green Zone Fortunes, Home Run Profits, and Wednesday Windfalls. I am Matt Clark. I'm the research analyst for Money and Markets. Until next time, everyone, safe trading.